Good morning, all. Saturday, October 10th, 9 o'clock. Haven't done this in a little while. It was very, very popular, probably the most attended thing. I don't know why. Maybe Saturday morning more people are available to be around. I enjoy them. I've just been a little busy on some weekends. Over the summer, I had kind of a busy summer, as I relayed to you, and I'll continue to do these occasionally. Here's the goal of today, if you've not been to one of these. And boy, hi, everybody. I see a lot of names I haven't seen in a while. So welcome to all you folks. I imagine you visit the free stuff page and get some of these. Here is what we're going to do today. This event is that exception where I do not have a topic chosen. I wait until I wake up Saturday morning and see what I feel like talking about. Okay, sometimes Friday I start because I did this time because my topic I decided, well, not topic, but what I want to talk about required me pulling some charts. But with a blank mind, I come up with so many topics. It's crazy. Kind of funny when you do that. If you don't pick a topic, your mind just goes nuts. I have so many things I can always talk to you about, you guys. I have lists for the next webinars I'm going to do that just never ends. So it just keeps going. So I picked one big topic, but it won't take all that long. First, a couple quick topics, and then I'll take any questions. If we're done before 9, that's fine. If not, hard cut off at 9 o'clock. This is Saturday morning. We all want to get going with our days, including myself, so we will not be here past 9, could be before that. Even if you guys have questions, I'm going to have to cut it at 9 o'clock. I think you all will appreciate that. Let's begin. A real quick one, first of all. For some of you out there trading, day trading or investing, whatever you want to call it, we know the market is the average of all stocks, the sum of all stocks, right? It's always been that case. And in my mind, the best way I can explain it is it used to be before the last few months, 2 to 4 months, I don't know. Well, probably going all the way back to the pandemic starting. It used to be you'd average 5, 6, and 7 to come up with 6, right? Now we're averaging 1, 2, and 15 to come up with 6. And I don't know if some of you noticed or not. I'm not going to take a poll, but if you want to jump in, feel free. But you know, the market correlation is very much gone, so to speak. Stocks are just kind of, for the most part, doing their own thing every day. The reason for that is fairly obvious. It's because individual sectors are more than ever diverse. Because the market, of course, is the greatest forward-looking anticipator there is, and it is already making decisions before you even know what to think about. And therefore, different sectors are taking off in different directions for all kinds of obvious reasons. And actually, the sector chart when I pulled up, it's not quite as crazy as I would have expected because these are weekly charts, but kind of on a day-to-day basis, you have days where the market may be up, but financials are getting killed. Market may be down. The biotechs are up. We're all over the place. So I just want to point that out. There's no other big lesson here, other than if you've noticed that it is true. It's been, I think, more extreme than any time than I've been trading, which is now 20 years. So don't feel bad if you feel that way. Any comments? Feel free. Just thought I'd throw that out there. Number 2, real quick. What is often hard to get across. As you know, I offer a ton of great, useful, free information. One spinoff from that is that I receive a lot of questions that kind of tell me how to trade in this email reply, please. I get it. I understand why they come in that way, but I want you to relate to something. Here's kind of an analogy, if you will. For some reason, this analogy isn't really an analogy. I think the right term would be more of a parallel situation. And it's so close, you may say, I don't get why you're even referring to this parallel situation. But the reason is people just for some reason, they don't wrap their heads around trading properly. You know what I mean? Do some of you understand what I mean by that, sort of? They just treat trading differently. I think it's because, it is, for a lot of people, that elusive carrot, because it has the potential to make more in 3 hours than you make all week at your current job, but a lot of people never get there, and it becomes frustrating, and people look at it differently. They look at it as just this easy thing for some reason, and it's not hard, but for crying out loud, you do have to learn what you're doing, right? So here's the analogy that maybe some of you can relate to better, more easily. Imagine you were a great golfer. Some of you probably don't have to imagine that. I know at least 2 of you in here are really great golfers. Actually, I think I know 3 of you that talk to me about your golf. If you had a web page with some instructional videos for people to watch and also offered instruction for those that really wanted to get good, help the novice, offer total help to the serious people. So you have this site up. you have all these great instructional videos. People appreciate them. They look at them. And the amateurs look at them, and they come around and they watch them for a weekend. And then you get an email that says, "Sir, I watched all your videos. I went out yesterday and shot 112. What am I doing wrong?" How do you respond to that? How do you respond to that? Seriously, it's the situation I'm in frequently, um, and I'm always in a tough spot. Yeah, I'm always in a tough spot because I there's an obvious answer, and I don't even like to say it, because as you know, I'm have fun doing what I'm doing. I'm here for whatever you want. I push what I do so little that some people don't even know. I do offer a seminar program in a trading room in a long-term investment letter. But I really try to make an effort out of helping those who want to try to learn it on their own, as either a starting point or to see what it's like or to get the information you can. But the truth of it is either you have to really get serious about trying to do it yourself, and it's a process that you have to go through. And I think certainly it's possible to an intelligent person to do it. As I told you before, I was not smart enough to do that. The information you can learn is just unbelievable. Every time I teach somebody, they're like, I had no idea there was so much cool stuff you could learn. So that's what it is. And for some of you, I've had several email conversations with people, a lot more the last 6 months. It's something that's been taking up more of my time than usual. Is just trying to help out people who are, just members of DTS and the free members and not subscribed to anything and trying to stick their toes in the water. And I've told several people, and probably a couple of you here listening to me, that were asking my seminar programs. I told them not to take the program. Anybody here want to vouch for that? I don't really know. There's just a handful of people I've said that to, and they may not be here. But I actually discouraged them from taking it because I just didn't feel they were ready. They expressed their financial concerns that they didn't know how to spread out the money between getting an account and getting it. And I told them to just wait until you're ready. There's no hurry. But that is an issue that I'm relaying it to you, and not for sympathy to me that I have to deal with it, but for just for yourself to remember. Take the golf analogy and go from there. You keep watching. And by the way, I have always enjoyed golfing. I don't go very much. I enjoy it. It's one of those sports I never got good at. And part of the reason probably is because I wasn't naturally good at it, and I never took a lesson. Never. And it probably shows if you were to golf with me. I'm not terrible, but I'm certainly not good. So, anyways, that was number two, I think, right? And then a quick. No, there's not. Yeah, you could be right, Eric. I don't know. I don't really know. Golf's a bit of a mystery to me. There's certainly some sports you have natural talent in. If you ever saw Michael Jordan when he was 7 years old, there is natural talent out there for sure. I don't know if it's true in golf or not. I can't even comment. Number three, just a quick word to some of you. My next focus. Naturally, I'm working on stuff all the time, and there's been a project going on that I got delayed terribly because of the coronavirus, and I hate to use that as a crutch, but it just simply was. And that is for the current and the future seminar students. I'm creating a home study course to supplement what I already do, which will be phenomenal. But it was due to be out in the spring, and it's not going to be out to the end of this year, and that's something I'm working on. But on the other side of it, for bringing in new people for free stuff to people, I'm going to be making more of an emphasis to reach out to people to just starting off, part-time for extra income. You evolve into a pro. Too many people seem to want to make this transition as I talk to more and more people. It's kind of like, oh, okay, I know nothing about trading or investing, but I want to target quitting my job in 60 days and I want to switch over. And I was like, no, that's not the way you do it. It's just too difficult that way. It's too risky for you personally, and it's also too difficult to have that financial burden sitting on your head unless you have enough money to live on for a period of time. So I want to really just get more people to get more people thinking about just sticking your toe in. If you got a couple hours free every week, get in there and start day trading a little bit. Just I'm talking about risking like nothing. And if you want to manage your own money, take some of it, put it in another account, and manage that account. Don't necessarily screw up your whole account if that's the case. And naturally, if you want to manage it, you can always subscribe to like the DTS letter and follow what's there, so then you're not at risk of you personally screwing it up if that's what you're worried about. But if you want to take a shot at doing it yourself and doing it better, it's not hard to beat the funds out there because, as you know, 93% of the funds do not beat the market. And if we should happen to come into any kind of a bearish situation in the next upcoming weeks, months, or years, um, the goal of funds. Anybody know the goal of any fund out there? The stated goal of any mutual fund is what? In a bearish market, what's their stated goal? And then cover your ears a little bit because whenever I say these words, I start yelling. Yeah, exactly. To lose less than the market, that's their goal. No, in a down market, yeah, to beat the index, meaning to lose less. Exactly, to lose it. That is insane. Who who wants to give your money to somebody and their goal is going to be to lose less money than something else loses? That's insane. You make money all the time. You understand that? You make money all the time. Period. That's what any reasonable trader does, let alone a professional. Anything else is just idiot speak, and don't even mention it to me. So, boom, 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 boom. And I'm also going to start a flurry of posting more educational videos soon on the website. Now, currently, as you know, at the free stuff page, and I assume all of you, if you are members here, you know about the free stuff page, but let me just post it in here real quick. The free stuff page, of course, is a spot you can go to get a ton of videos. Every week there's a trade of the week video that's people find very educational. They're the most popular things. All of the events, as I call them, including the Saturday morning coffee, get posted out there. That usually takes to the weekend, or I apologize again, this last one is late, but they always come out within about a week or so of the event. The scanning nights on Monday are not posted. But then in addition to that, if you go down, there is a lot of other stuff there. And then there's also a section that's called educational videos on various topics. And a couple of the most watched videos on the site are actually the tradability of stocks and controlling slippage. And I'm going to be adding a ton in that section. And by the way, when I add these videos, they are required supplements to the DTS seminar program. In other words, these are not just Mickey Mouse videos. These are important topics that supplement what's taught in class. Of course, naturally, all these videos together do not encompass the very, very critical part of what I teach. But there's so much to teach. I'd either have to do like a 7-day program instead of a 3-day program every cycle, or teach the key technical analysis in 3 days, and all the supplemental stuff keep supplementing with these events and videos. So there are going to be a lot more of those coming out as soon as I start cranking them out. All right, those are the 3 quick topics. It's 9:17. I am now going to go on to the main feature, the educational part of today. I'm talking a lot for Saturday morning coffee, aren't I? But I'll probably be done with this at about 9:35, and then any questions you guys want to have free flow of questions, feel free. About the virus pandemic. Let's take a walk through the recent past and see if you could have done better. I always like to ask questions to get you thinking. Usually I pause for answers while you are thinking, but today I would like to really pause to make you think and come up with answers and the reason why. I think it's critical to the extent that maybe we'll pull something out of today. This is the area where I'd like you to kind of pay attention, answer questions, and maybe I'd like to think that a third of you will be thinking about this next 15 minutes the rest of the day today, and maybe even for the rest of the week. It is, in general, a topic that I hit on a lot, and I'll explain what I mean by that later, but let's go through it so I don't goof up the point of what's coming up. I think you will find it amazing. So here we go, going back to the beginning. The news that day was 2 people infected in the U.S. are the first 2 confirmed cases in the U.S. according to the CDC. That's the Center of Disease Control. And if anybody doesn't know what the CDC is at this point, you must be living in a cave. Okay? Everybody see this slide? That's the news that came out a while ago. 2 people infected. This is way back in the beginning, of course, of the pandemic. 2 people infected in the U.S. First 2 confirmed cases according to the CDC. Okay? Before that was announced, the day before that was announced, the market looked like this. And I have the right half covered up, obviously, so that we can discuss how these news events will unfold and affect the market. Is everybody out there able to type, understand what I'm doing here so far? We have a news event and we're about to see how that news event affected the market. And I want you to participate all that you can here, okay? Now by the market, I'm calling it the SPY. That's the S&P 500. You can pick whatever market you want. It really doesn't matter. I always look at the SPY and the QQQ together as being the market. You want to throw in the Russell 2000, or you want to throw in the IW, or you want to throw in the Wilshire 5000, 4000, whatever. You can look at whatever you want. Don't really care. The only thing I don't want you to look at really is the Dow, because it is not really representative of our market. It's only 30 stocks. But here we go. So that's what it looked like before the announcement. The announcement comes out, and then here, and this is a daily chart, right? So here's the next day. So then, it came out. Actually, it actually happened after market hours, and then the next day it looked like this. So here is that little day there. That's a red day. It gapped down, and then a red bar, right? So that's a day in the S&P 500, and that's the day in reaction to the news. And the news was first 2 confirmed cases in the United States. Okay. So here I'd like to actually pause and have a discussion. No volume on the chart, that is correct. You don't need no stinking volume on this chart. It's not the point of it, don't need it. All you need to know here is that the news event came out, we gapped down and put it in red bar. So based on what the information you have right now, what action should you take, if any? Go ahead, go. Do we exit long positions? Do we start new long positions? Is this a buyable dip? Do we start short positions? Okay, you want to wait? None. This is a daily chart. Again, this is a daily chart. So we're up here, and then we have a news event come out that the virus has been in the United States confirmed, and we drop down to here. Now keep in mind, for those of you saying, wait, right? What happens if you wait and we just free fall? Remember, I want you to remember something. I want you to remember something. Hit the moving average? Oh, you go long. So you want to go long, James, when you hit the moving average? I'm giving you guys the benefit of history. I mean, we're going backwards in time. This isn't really that hard of a question, but I want you to keep something in mind, though. If you let's say you have a long account, right? And all of a sudden, in the course of a couple of weeks, you wait and you're down 15%, right? So what do you do now when you're down 15% in your long-term account? Let's assume this is not an account where you can't sell it. It's an account you want to manage. It's an account you want to make money. You're willing to dump and redo, whatever. What do you do when you're down 15%? What do you do if you go down 20%? What do you do when you go down 30%? I mean, at what point do you pull the plug? See, ideally, whatever you're trading, whether it's a day trade or a long-term position, you have an area in mind that you will say, that's enough. I need to get out of this. I need to start over, need to regroup, need to take some kind of action. Because there is a single moment in time for stops that once you don't take it, it gets exponentially more difficult to get out. Do you all agree with that? That once you pass that moment that you're supposed to get out, it gets exponentially more different, correct? We've all been there, right? And there's a good reason for that. It's because every reason that made you not take your stop, whatever it is, you have the thing in the back of your head that, well, if I get out now, it's going to bounce back. I'm going to get out at the low. I'm not really down this money until I sell it. It could always come back. And this is just too big of a loss to take, right? That's what you're thinking, right, everybody? And the problem is, if those are your thoughts when you're down 10%, isn't it true that all those thoughts are doubly true when you're down 15%? Actually, they're exponentially true. So if you drop another 50%, it's even... Isn't that true? In other words, with that rationale, the more you drop, the more you don't want to get out. True, everybody? And taking the other side of it, if you're very proactive and you wanted to hedge or you wanted to short, or if you were flat and you wanted to get short to capture this big move down, at some point it becomes futile to try and do it, right? Because if you start shorting, if the market puts in three huge red bars and you start shorting, guess what? What if it bounces back and now you're underwater and then the market ends up dropping in 6 months and you could have made money, but you're out of it because you had terrible entries, right? Well, Nathan, it depends. It depends. I can't say that. You can't really use a percentage, Nathan. A percentage move really isn't valid because some stocks move 15% every day, right? So I mean, that's why the point of this is not to say, the point of this discussion is not what are your stop losses. The point of this discussion is going back and thinking. We had this pandemic come on, there was an announcement, boom. What would you have done about it? And what would be the basis for that decision? At the time this was announced, do you start thinking, wow, this sounds bad? Tell me, does this comment make sense to you in a sense? Because this is, I think, a very common sense type of comment. The comment is, okay, I have some good profits built in. And you know what's going on? This thing came out and I heard about this and this sounds really bad to me. And this could spiral into something terrible. I think caution's a better thing and I'm just going to get out of everything or I'm going to take a half of my account and buy puts on the market to make a killing. Right? Isn't that kind of the typical thinking? Right? Naturally, what would have happened if you took out a ton of puts on day one? Well, let's explore and see what would have happened. So the very next day, we just kind of hang right there, anticipation, right? Nobody's quite sure what to make of this. So there's a good thing if you wanted to get out of longs or if you wanted to get short, the market didn't gap down $1 billion without you, right? So what do we do now? We have this stall day. What do we do now? Do we increase our bearish bias, meaning I'm more anxious to take a bearish positions? Do we say that anybody want to do that? Is this reason, this chart now on day two, nothing new was said. We still have the news from day one. Do we increase our bearish positions? Trust me, you're going to like this presentation in 5 minutes. I don't see how anybody could be bored with this, but do we increase our bearish thoughts? In other words, what's going on now? Without any new news, the market didn't drop. Somebody could argue, couldn't she, that, well, if we didn't drop, maybe we're going higher again. We're in an uptrend, right? We're heading higher in general. This looks like a buyable dip to me. As a matter of fact, somebody said, hit the moving average. I guess you want to go long now, right? Do you want to go long here? So James is saying this is an uncertainty candlestick. If right here, if you woke up, if you were asleep for a month and you woke up and you read the news and you saw this two candlesticks, everybody tell me, you can't wait. You're going to go to the moon tomorrow. You're going with you booked one of those flights to go to the moon and you're going to be gone for 6 months and you have to make a decision right here. Do you want to take your entire account and go long the market or go short the market? What would you want to do right here? This is the beginning of the pandemic. This is the beginning of the influenza pandemic. The first day we had any serious news about it, the market gapped down, and you have to make a decision what to do right now. I know a lot of you would say you wait, and I explained that sometimes waiting may be a cautious answer, but it isn't always the right answer. You'd stay flat. You'd go long. You'd go long. Why would you go long? And we have this news that just came out. And this is not a fictitious thing. This is nonfiction. This is, what happened in the past at some point. You're saying that, now I'm talking about for long term though, Gilberto also. I'm talking long term. I'm not talking about like for a day trade tomorrow. I understand for a day trade. You're saying we're oversold? When you gap down, how many people got out? Nobody got out. Everybody's trapped. So we're not oversold. By definition, that can't even be possible. Well, Shelby, hold that question just a minute. It might be a good question. So the news continues over the next weeks. The WHO director, that's the World Health Organization, in case you've been under a rock for 6 months, calls the flu problem a public health emergency of international concern. So now we're getting some more information about this. 7 countries are now reporting confirmed cases. This is in the following days, weeks. Texas Department of State Health Services confirmed a second person has died in the United States. Worldwide confirmed cases are now 2371. New England Journal of Medicine article argues in response to suggestions that the WHO evaluates its criteria for moving to phase 6 and declaring a pandemic. Now it's declared a pandemic. And that global extent of a pandemic should be described objectively and should be just one factor in decisions about how to respond. So there's the news. Back to the chart. That's the news. It's now a couple months later. What is this chart going to look like? If you went to the moon and came back, you could lock in gains. Leave us know if you bounce from. Okay. So what's this chart going to look like now? I think as some of you are being cautious because I'm technical and you don't want to say, you shouldn't respond to news events. But in your gut, if you got back from the moon and the day you left, you heard about this pandemic starting, what are you afraid you're going to see right now? Because what are we going to see on this chart right now, guys? What are we going to see on this chart? I'm now going to show you the next 2 months. Here's the next 2 months. This is day 0, right? Here's the next 2 months. You ready? There's the next 2 months. Huh? Think about that. What's going on here? I didn't make up this chart. This is true. I swear to you, this is factually true. Some of you are confused now, and you're probably pulling up your charts, and you're about to say to me, Paul, I don't know, you must be on some kind of drugs in your coffee this morning because I don't know what chart you're looking at. That's not what happened. What's going on here? Do you guys remember that when the pandemic came out, that we dropped and then we rallied? As the Fed started easing it. That's a comical question, Rich. Guys, I'm not making up facts. I'm giving you history. You guys keep acting like I'm making up some story. You tell me, did the Fed raise yet? Lowered interest rates? I was just laughing at the Fed easing interest rates. It's like if they eased them anymore. The Fed didn't ease yet. The bad news continues to pour in. It has become a full global pandemic. So finally, over the next months, we know what the chart is going to look like. So over the next months, I know all of you don't study the charts per se, and maybe you can't tell me exactly when we started dropping. But what are we going to see now that we're looking at? I'm going to switch to a weekly chart now so you can see the next several months. So what are we going to see now on this weekly chart that's actually going to go out 6 months? What are we going to see? And this next slide will bring to a conclusion my talking point right at 9:35. Ready? Ready, everybody? Here's the weekly chart. And there's going to be a little arrow pointing at day 0, the day that the bad news was announced. You ready? There it is. Oh, Fire Tower. Hey, Fire Tower, how you doing? Hope things are going well for you there. What a poorly timed comment, though. This is day 0. This is the day that we announced the first 2 cases in the United States. And there's the next, actually 10 months. What's going on here? I refer to this as the virus. I refer to this as the pandemic because this was the pandemic. This was the swine flu pandemic from 2009. I hope this really just opens some eyes for some people. I hope this really opens some eyes for some people. Maybe for some of you, you didn't even get the point. That's fine. I always say if I can change the thinking of 10% of the people I'm talking to at any moment. What do you guys think about this? Well, yeah, first of all, just a little warning. We can say the word politics as it refers to trading, but please don't get into any political discussions. But I'll explain to you what the difference is. But I want you to just, all these people that say, oh, it's so easy. You should have been short. This is a global pandemic. You're an idiot if you're not sure. What's the matter with you, right? Well, here's the difference. Yeah, but even the initial reaction, Peter, the initial reaction was we crashed pretty much, right? Before anybody knew the effects of the economy or anything like that, before shutting down. The initial reaction was we crashed. Back in 2000, now let me just add one other slide here, because some of you may be saying, oh, well, that's swine flu. Because what's hysterical to me? I was an adult 10 years ago. Most of you know I'm not 21 years old right now. So I was an adult. Do you know that I don't even really remember the swine flu? I mean, I remember, you guys agree with this, right? You remember it was kind of on the news. It was just kind of a thing. Oh, yeah, swine flu, whatever. Nobody cared about it, right? So maybe some of you are thinking, oh, well, Paul, you're picking out something that just wasn't a big deal. Not true at all. Not true at all. The strain represented a unique combination of, and this is the swine flu 10 years ago, of influenza viruses never before seen in humans or animals. The WHO declared the swine flu an outbreak, a pandemic in 2000. So it was a pandemic, folks. It was a pandemic. And over 1/2 million people died from the swine flu in the first year. 1/2 million people died. This is not a nothing burger. As a matter of fact, at the beginning, this was worse than COVID. The initial analysis of this was worse than COVID. Do you guys all understand that? So my point, of course, is this, is that, again, you can't interpret news and make intelligent decisions. Why did the market bounce in 2009 and fall in 2020? Why? As soon as somebody gives me that answer, well, that's part of it, Glenn, but still, the market is not necessarily powered by the individual people sitting around watching TV. Not election year, no. Total technical context. You're right, Rich, but in what extent? To what extent? Right. Guys, 2009, we had been falling. We were completely washed out. That was the crash, right? It's all supply and demand. See, when you're at the bottom, there is no such thing as bad news. There is kind of. But do you see the difference? When you're at the bottom, bad news becomes okay news. Good news becomes great news. That's the way it is, right? Exactly. In 2009, everything was cheap. Nobody cared. It's like, okay, we're going up. Why should stocks necessarily fall? Because people are getting sick, right? And remember, I know we shut down this time, but the market crashed before we shut down, everybody. So that really is not the answer, right? You go to where we are today. Well, you know what? I didn't put a chart in here for today, but you know where we are today. When this pandemic came along, we were at, who just said the word Shelby? Frothy, a frothy level. You see, it's like I always say with news. It's not that news is like irrelevant, but number one, it's already built into the chart to a large extent, number one, right? And number two, the news is the spark that can ignite a fire. I'm going to pull up today's chart real quick. But what is critical about a spark? What do you need besides the spark? Right, you need that pot of gasoline, right? You need the pot of gasoline. So what you're looking at there in 2009, we had a big spark come, a biggest spark as we've ever had, but it was dropped into a pail of water. Does that make sense, everybody? The news event was not less. The news event was not unworthy of anything. The news event was not insignificant. In the beginning, research it yourself. Don't believe me, because I don't, how does that saying go? I don't have a dog in this race or whatever. It doesn't matter to me. It's just that this was initially a bigger deal than the current coronavirus is. So you can't tell me the news wasn't as significant. It's just that news event, while it was a huge spark, it was dropped into a pail of water. What do we have today? You go back to right here, daily chart. Yeah, so you go back to here, and I know it looks silly here because we went up so much since then. But here, what a monthly chart. Does that make the point better? Yeah, so coronavirus here. Look where we are. Look where we are at the beginning of 2020. We're way up there. As a matter of fact, we're at the top level boundaries of even what you would call this little trend line thing going on. We're right here. So now that spark is thrown onto a bucket of gasoline. And you know what? When you have a bucket of gasoline, you don't need much of a spark. In other words, everybody at this point is looking around saying, hey, is it time to sell? Right? Look at here. Is it time to sell? Is it time to sell? I have all these stocks long. I want to protect it. Is it time to sell? Somebody says, I'm going to sell. And guess what? Prices drop. And the next person says, oh, this is it. I'm getting out. Right? What's that fire tower? What's the matter? So that is my point. And it's 20 minutes till 9. And I hope any comments. I was just thrilled. I've been meaning to do this for a while, actually. And I thought I'd do it today. So I hope it really at least makes you think about, what do you look at? That slide there. So what do you look at? Unfortunately, it's like the 90% of the people that I ever talk to cannot really answer the question, what do you look at? And listen to this last comment. I look at myself like this. I'm too stupid. I'm too stupid to absorb all the information out there and then declare that everyone is wrong. Think about it. And that's why we follow charts. That's why we don't just listen to news events and decide what to do. Who would have thought that from the bottom, that we would go to here? Does that make sense to anybody? Guess what? I was playing long through there, long term. I was playing long. Anyways, questions on this? Anyone, everyone, or questions on anything you want? It's now free, open topic time, I believe. While you're giving me your questions, just to remind you, for those of you looking for information, I just want to remind you that every 6 weeks approximately, the first part of the seminar program I teach to everybody. It's on a Friday always. The next one coming up is going to be Friday, October 23rd. So be sure to mark your calendars to be at that. And that, of course, is followed by the seminar program. For those of you interested in partaking in that, it's the following 3 Saturdays and every 3 Saturdays, and then continuing on. Every cycle is a 3 Saturday program, and then you can continue taking as many times as you want to. And that starts the day after the Friday class, October 24th. If you're ready, don't put it off. Learn what you need to know beyond your beliefs. Good trading is not an accident. I left that on there because I like this from an old presentation, but I like that title, Good Trading is not an accident. Questions, guys? Any topic you want here? I'll tell you what. I'll sit here for 5 minutes. If we don't have any questions, we'll go on with our day, which is fine. But part of this was if you have any questions about anything. The other thing I never mentioned this a whole lot in the past, but I try and bring it up every presentation now because every time more people say, "Gee, why didn't you tell me about that?" If you want to day trade, there is a way you can do it without $25,000, and that is through a proprietary trading account. And for some people, if you heard about it, it may ring a bad tone to you, but it shouldn't. This is not done through DTS. I'm not part of this at all, but I know a group that for years, I've had 100% nothing but good comments. You put up what's called deposit money. You're allowed to trade 10 times whatever your deposit is. You put in 5K, you can trade 50K. You can fully day trade as a full day trader, and your money is kept safe in a U.S. account. You don't have to pass any tests. You can be trading in 48 hours. Email me if you want more information on that. And if you do want to, combine that and also take the seminar program, there's a little bit of a benefit to doing that if you want to do that at that time. But you have the right to go in and lose all your money on day one if you want to. Yeah, Gilberto, email me. It's only for equities, that is correct, and you cannot hold overnight, obviously. Yes. Yeah, actually, I saw it in there, Burjed. I'll get back to you over the weekend. I'm having a fun weekend this weekend, so. Special chart software, Brian, that's a good question. The charts you see on these presentations and the ones I use during the day are TradeStation charts. I do like TradeStation charts. I want to make it clear, though, I am currently not actually recommending any broker per se. The reason is I'm going to be looking myself this fall at possibly switching. I use 3, and I haven't looked in a long time. There's a lot of new stuff out there. There's been a lot of changes to the industry. And maybe when I'm done, I will have an official recommendation. But I like a certain look to my charts. My favorite chart packages have not necessarily lined up with my favorite brokerage. Money-wise. So I use some different places, and I'm not sure I have the best combination out there, so I don't make any recommendations. But the charts that I use are TradeStation that you're seeing there, mostly because I like to look them. Again, as far as for every wherever you go, most places now, your account is tied to a chart. Like TradeStation, my account there, you have to use TradeStation charts. So if you like TradeStation charts, you have to have your account there, and whatever their rules are in terms of costs, fees, and whatever, you're stuck with that. There are some places that you can use different charting packages, but it's from a list that they've chosen. So it takes a little bit of research. There's some platforms out there I've never even used yet that people like a lot, like I think Thinkorswim, and Schwab is one out there that people like. So we'll see. How can we tell when Fed buy is initiating? By looking at the charts, DSOP. By looking at the charts. That's why we look at charts, because it doesn't matter what's causing the buying or selling. It doesn't matter if it's a Fed program. It doesn't matter if it's the Baltimore Police Benevolent Association that's mutual fund is buying, putting $1 billion into the market. It doesn't matter what it is. We are, money always comes in and money always goes out. But there's always that battle that occurs between the money that wants to buy and the money that wants to sell. And our job as technical traders, which works perfectly, is to constantly analyze that battle across different time frames to see the victor of those battles, and therefore deduce, depending upon what time frame you're looking at, who's going to be winning. Keep in mind that for Thursday and Friday, the Bears may win, but for the month of November, the Bulls may win. So the time frame you look at is critical. But for every time frame, there's a battle going on, and that's what we analyze. And that's exactly how you tell anything that's going on. Because, just by programming, there's just low interest rates. There's all kinds of things that cause big buying or selling, right? Including news events, right? Lucio, if you would email me, you will get a reply that will include a referral to the person you'd want to talk to. Generally, international is fine, because this place, actually, the reason you can do it without needing any kind of courses or licenses is because the trading account is in England, and your account money is held here in the U.S., which is what makes it such a great combination of things. And generally, international is fine. I don't know if any countries are excluded because of some specific reason, but if you email me, you can get more specific with the person who would be setting up your account, okay? Jay, do you make them during earnings season versus, does it? Good question, Jay. During earnings season, well, first of all, the reason Jay is asking that is because earnings season causes gaps, which is part of the trading I like to do, day trading. So I would say statistically, Jay, it actually hasn't borne out to be true. I think it stays about the same to the extent that I've tried to analyze that, but the potential is there. But I don't just do gap trading. Gap trading is about a third of my day trading, something like that. And a lot of my gap trading is also not the morning of the gap. Actually, some of my favorite times for gap trading is the next day or 2 days later, or that afternoon. Excuse me. But because earnings is what creates most of the gaps, earnings season creates more gaps, and to the extent you're a gap trader, you have more opportunities. But sometimes, sometimes it's better to have two really nice looking gaps than it is to have 600 so-so looking gaps. So it doesn't seem to pan out to actually make more money, but there is more opportunity that way, yeah. It's kind of weird, Jay, sometimes for me, the more difficult it is, the better I do, because it increases your focus, it seems. Thanks, Glenn. Steven, this is, oh, I don't, sorry the slide even says that. I think that's just, yeah, I mean, it's not going away immediately. I've had that slide up there for a year and a half. So I think it just simply, I guess the legal technicality, if the price were to change, okay, I said it was limited time offer, that's all. But yeah, it's not changing anytime soon. The government always stimulus disaster. Well, Linda, that's a tough question. Probably over my head to be qualified to answer properly, because some of it would be very subtle. I mean, through interest rates, they've always tried to stimulus disaster, and that has become a key tool over the last 10 years, a huge tool. It used to be called, Linda, a long time ago, there used to be this terrible, terrible thing out there, and it was called printing money. It was like a swear word. You weren't even allowed to say it. They'd come to your door and drag you out in the street and beat you up if you said printing money. And then one day about 10 years ago, somebody changed the term to quantitative easing. And it sounds really cool, but it is just printing money. And now that's the cool thing to do. We don't print money, we just quantitatively ease the economy. But there's always, I think, some response. But what's the last disaster we had? I don't, I was trading in 9/11 thing, but I don't remember exactly what was done back then. Best time frame for swing trading and day trading. Well, Nathan, as a day trader, your parent time frame, the one that you cannot fight, is always the hourly chart slash 15-minute chart. They're very, very similar in effect. So that is your parent time frame. But which one you want to use, Nathan, is up to you. It depends on your speed, frequency, what you want to do. If you could be on a 1-minute chart taking setups, all the setups work the same, a 1-minute chart or a 15-minute chart. I personally like the 15-minute chart. I kind of like to hold stuff for most of the day when I can. Some people like to be in and out in 10, 15 minutes. So it really depends on what you personally want to do in terms of speed and frequency, etc. But the parent time frame would be the hourly chart. And for swing trading, of course, your primary chart you're using is a daily chart. There is a video, though, Nathan, on the free stuff page that I gave you a link to up there a little while ago. And there's a video on there called Beware of These Two Time Frames. And it discusses swing trading. Swing trading, if you're there with the market during the day, can be very, very nice if you get intraday entries. But if you are working a job and coming home and trying to find entries and exits and use orders while you're at work, I think you will be struggling terribly. Swing trading is not a good thing if you're using a daily chart. You have to really come down and use the hourly chart, and you're not really able to do that unless you're there either at the open or at the close. Okay? Does any of your traders have customized? No, Don, I've never got into customized easy language. I have people send me stuff but I mean, there's nothing I want to do, Don. There's nothing I want to do with my charts that would require that. Um, well, I actually have a little scanning program I use for a few things, and I get my main gap list from there, but I can get it from TradeStation. It's just more convenient for me to use the scanning thing I use. But you can get it from TradeStation in a couple different ways. They actually have gap lists built in. And then on any platform, you can take a symbol list, any symbol list, and put in 2,000 stocks and then sort by percent change that day. And you will effectively have a gap list, okay? In Tools and Tactics, you describe how to scan for best trends. Can you explain a little bit more? Well, keep in mind, the purpose of books, keep in mind, is not really to teach you a terrible amount. It's to whet your appetite, and then, of course, to promote the underlying company. So you got to take what's in there with a grain of salt, in that it's not necessarily the end-all answer, right? The best trends really gets very detailed about when you really get down into it, and you are looking at a variety of things. And that's one of the reasons I like moving averages on the chart. The only reason I keep moving averages on the chart is to better show good trends, to help you to see when they have become extended enough that they may still be heading up, but that the next rally is not going to make a new high, or the next buy setup may fail. You can become pretty good at actually predicting that. So it has to do with, like with all charts, looking across anytime you're about to take a position, there's 4 time frames you have to be keenly aware of. What is required from the time frame above you, from the time frame 2 above you, and from the one beneath you. So it's part looking at across the multiple time frame analysis, and then specifically on the time frame you're on, as understanding just the price action that's going on, the 3 location items, which are minor support, retracement amounts, and moving averages, and understanding how the last rally and pullback has acted based on those 3 location items. I hope that's a fairly good answer for you. Used to be some limit. I assume you're talking about quantitative easing. Does it always affect the market positively? Um, no, Linda, not at all. As a matter of fact, Linda, the market, you'll see oftentimes, um, would prefer to climb the wall of worry rather than to be helped. Anytime you help the market, Linda, and this is a very true comment, people get confused because the government does something to quote unquote help the market. And you know what the market says? The market says, oh my God, we need help. I didn't realize we needed help. I'm out of here. And that's something that happens a lot. And you see it a lot of times. That's the reason interest rates are often backwards to what people think, right? Everybody thinks that rising interest rates are bad for the market and falling interest rates are good. It's not often true. When the Fed decides to lower interest rates, it often is a signal to the market that the Fed feels the market's in trouble. And if we're in trouble and it needs help, guess what? I don't want to be sitting in a market that needs help. I want to be in a market that is so strong that we can't even hold it down by trying to raise interest rates to contain it. Does that make sense? Where do I see the QQ going through to December? Well, Brian, first of all, you have to understand a couple things. Number one is that it is even the longer term picture is almost a day-to-day analysis. What is done based on the reaction to every rally and pullback that we have. And again, that bull-bear battle. So from what I am looking at now, I assume we're going to have one big rally coming up yet. But you have to understand that if that doesn't happen, I'm going to be short. But I think you're going to see a huge surge. But again, at this point, that has to be confirmed, and it's not. So if you see me talk 2 weeks from going, the market falls, I'm going to be short. But what I would really like to see happen would be for the market to put in a huge super rally on what I want to see is the market to struggle through bad news, but hang in there. And then I want good news to come out. And I don't know what good news is even, but I want good news to come out and the market to celebrate it and rally to the sky. And then it's time to pull the plug on everything. But how that actually evolves is not going to be easy to tell necessarily. Excuse the noise in the background. We have guests. So the other thing that, I was going to make this as a topic today, but I didn't. But let me just quickly say this because we have 2 minutes and we're done with questions here. But I think one of the big faults that people do when they start trading or investing is they want the magic number. They want, give me the number that the market will rally again. Give me the market that the market will fall again or whatever it is. And that's trying to overuse technical analysis. In other words, we find these areas, and then at some point, it's not a matter of what's the exact number. It's understanding how to handle that area. And I don't know if that even makes sense to some of you. Does that make sense to some of you that have been around a while? That last 20% of trading is not give me the number to the penny. It's, hey, we're in the zip code. How do I handle this? And that's what nobody gets. Very few people ever rise to that level to understand it. So it's handling an area. It allows you, it goes along with one of my favorite sayings in trading, which is I'd rather make money than be right. It's not about being right or wrong, it's about making money. And it's why I can have the wrong bias and still make money. So you can't get hung up on this, what number is going to be the top. There's no such thing. Anybody that tells you there is just an idiot. Because it evolves every day. Every day there's new information that has to be absorbed. There's a different balance going on. You never know if there is a fund with $1 billion waiting to pour it into the market, or if if Warren Buffett is going to sell everything he owns. You never know when that's going to happen. So we have to watch the reaction to all this stuff. And when buying comes in, how do the current people react to the buying? When selling, and that's when you make your decisions. And then you handle focal areas. In other words, even if you think the market is lower, you may buy a certain area because the comment is, if we go higher, this is the perfect entry. If we go lower, this is the perfect entry. Are we going lower for sure? I don't know. But the worst thing people do is react late. If you're in a sideways market and you're going sideways like this, right? And you're, even if I think we're going higher, I'll short the top. Because that's the perfect entry if we go lower. I'll buy the bottom. The worst thing you can do is wait to break the bottom and then start shorting. Because most of the time when you break the bottom, It depends what type of consolidation it is. But there are consolidations that are specifically and intentionally going to go sideways. And if you buy the top or short the bottom, you're going to lose every single time. So it's not about being right or wrong. It's about making money. And naturally, the backdrop to making money, you got to know what you're doing. But it's not about picking the exact number ever. It's about math and probabilities as well. And that's why one of my favorite presentations is the one that I did a couple months ago called The Three-Legged Stool of Trading. Go see it on the free stuff page. Everybody, it's 10 o'clock. Have a great rest of the weekend. Take care.